Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there is fear and are cautious when there's greed. Today, we're going to be taking a look at the stock market, the Magnificent Seven stocks, as well as any stocks that catch my eye for earnings reports that came out this week. Let's start off with fear and greed. CNN, Fear and Greed Index, we are down in the low greed area. It was down in neutral not too long ago, but ticked back up a little bit into greed. On pievesting.com, that's pie with a Y, you can see that we were recently in extreme greed and have just now gone down to only greed. So we were spiked up here, and I thought it was odd how CNN was down in neutral and we were in extreme greed on pie vesting. But now finally, pie vesting has gone down to 65%, still in greed, but getting lower. And as far as earnings reports, any that caught my eye, I see WD-40 here. I look for companies where I use their products, where I like their products. So there's WD-40. Delta, we could take a look at that just with how much they've been in the news lately, all the Boeing stuff going on. We have Lovesac. I do like their couches. Their bean bags are nice. We can take a look at that. And I think we have a bunch of bank stocks. Yes. Wells Fargo, BlackRock, JP Morgan. Those will be some important ones. So I don't know if you guys heard, but this week the CPI report came out. And if we look up inflation, you can just type in inflation when you go to search. We have the United States inflation rate year over year. And it puts us on monthly. Make sure you're off log so you can view it better. But you can see here it ticked up a bit. And so because inflation ticked up, the Fed's wanting it to get to under 3%. Their goal is to get closer to 2%. That's where I have this red line drawn out. Now you can see here, this is on the monthly. And you notice we have accumulation here. I thought this was interesting. Not sure what it means more than this, but we have the 100 and the 200 week moving average, the 100 and the 200 month moving average, and we're in between that. And so I thought to myself, this has happened before where the inflation rate kind of got stuck in between like that. And we have to go back pretty far. See, we're, again, looking for the two blue lines there. And we'll just keep going back. You can see right here, it was more elevated, the 100 and the 200. But I saw this, thought it was similar. This was in the late 70s. It wasn't between the 100 or 200, but early in the 70s it was, before the two big peaks of inflation. So I want you to take a look at that. A lot of people have compared this to the 70s, that here we were between the 100 and the 200 week. It got under and went back up. Now there was like a minor spike. Look at this. Inflation was at 6%. Recently it was as high as 9%. So people have been comparing it to the second curve. But then when they cut, this was after they cut, it was bouncing around between the 50 and the 100. I don't know. I just thought that was kind of interesting. So, going back to right now, people are worried if the Fed decides to cut too soon. And with it going up, if it doesn't start to come back down and stay at the lower 3%, then you could assume they're going to keep rates higher for longer. And the reason that's important is because let's put it back on log. Here are the red lines are the rate cuts, the first rate cut after the Fed held the rates higher for longer. The first rate cut, which is, by the way, within a month of the yield curve uninversion, you can see it's pretty close to the top. This is the dot-com bubble here. It's pretty close to the top. When they cut rates, the bottom was within a year and a half, 2 years. Same thing here, great financial crisis. Now this white line, that's just where I put the local peak for inflation. There was a inflation peak back there. And recently, I noticed that inflation, it was near or before the market bottomed here in 2022, and this was the rate cut. We went up a little bit, and then we had the COVID sell-off. Let's go to the weekly time frame. I wanted to go back and take a look at the 70s, though, because people compare this time with inflation concerns to that of the 70s and the early 80s. And I'll say this is my opinion, and you don't have to agree with it. Even though we are dealing with inflation issues like we did in the 70s and 80s, I don't feel like the conditions of the market are more comparable to today than that of what happened in the dot-com bubble or the great financial crisis. And so I take what I see here with a grain of salt. Now, some similar things may happen, but I don't personally believe it's going to. We'll see, though. I mean, when the government prints 6 trillion out of thin air, you're going to have issues that you're going to have to deal with to correct it for a while. So, maybe we're going to get a choppy market for half a decade or more after this next bull run up. But you can see here, first rate cut was further away from the peak, and inflation was the bottom here in the mid 70s. When we had the higher rates, what's interesting to note is that this dip, is near rate cuts and the inflation peak, but the market kind of went up and then, really from where it was before, just kind of down. You could say sideways, I guess. And then it just kept going up. Once the 80s hit, it was a 10-year run up. Of course, we had the 87 flash sell-off. So, if anything, guys, I don't look at this religiously. I just find it interesting. And sometimes it's easy for us to take a look at patterns that have happened before and assume that's going to happen later. And we have to check our biases because, all because rate cuts happened near the top, and that can be part of your theory, it is part of mine, does not mean it has to happen again. So when they do cut rates, I'm going to be very cautious. And part of the reason I think, maybe we will see something like the dot-com bubble or a great financial crisis is just the strength of which we've been moving up so fast. 2022, from the bottom to the top, the S&P moved up 50%. And heck, even from early November of last year, we've moved up 27%. I mean, that's insane. And so that's why if rate cuts were to happen within the next year, and we've moved up like 40, I showed you this here, guys, we move up, 50%, 80%, 100%, just within a couple of years. That's where I find it to be more likely that there might be a big sell-off coming. Now, that's just a theory of mine. We also do have this channel I've drawn out, that takes into account the tops, the bottoms. Yes, COVID got underneath it, but the candle's pretty close. I don't know, take from that what you will. I drew this other trend line, that shows this bottom that we keep tapping a lot. And I got these moving averages on. If anything, guys, I just find this to be interesting data to look at and just something to consider. Maybe we hit some key levels and it shows good times to buy in. Anyways, volatility. We are still in low volatility, but it is starting to coil up and down and possibly get higher. Should volatility get above 30, those can be areas dollar cost average in for the long term. When you take the volatility of the market and divide it by the volatility of the VIX, you get this looking chart. And when it peaks, that tends to be market bottoms. And when we get these dips, those tend to coincide with market tops. So I like to throw on buy and sell signals because if we peak and we get a sell signal, that means the market's getting ready to go back up. And I got here on the weekly. Just something I use. It's turned out to help me quite a bit. Again, don't base everything just off of technical analysis. It's just another tool in your tool belt. This is the yield curve inversion I told you about. You have to watch when we uninvert. And it is curious how on the weekly we're between. Look at how it bounced off the 50 week, got above the 100 week, but it's right in there. So maybe it's getting ready for a violent move up. But once we uninvert, and that has been close to the rate cuts, that tends to be when a recession is on the way. Bitcoin, I do videos for Bitcoin, and you can see here that, we are still at 70,000. We take a look at the last month. This was the prior all-time high or close to it in 2021. I like how we're staying above it. I want to see us stay above Whenever Bitcoin dominance tanks to the lower 40%, that's when altcoins can go nuts. Let's take a look at the Mag 7 stocks. So NVIDIA, let's throw it back on the log. When you draw a fib from the high to the low and take the fib off log, you get a chart that looks like this, and you notice how we're hitting these extensions. We hit the 1618. If I go to the daily, you can see we did hit the 2618, came down to the 20 moving average, went up, and then after that we went to the 3618, wicked right to it. Now here this is concerning. We have a weekly sell, but right now we're staying above the 10-week moving average. If we zoom in on the daily, are we getting signs of a turnaround? Yes, we are. And so hopefully this holds, but again, these can turn around too. The next level of break is this 966 level. And then looking at the fibs, if we zoom way out, let's go to the weekly again. You see the 4236 is at 1114. So if you bought NVIDIA down here around the 200-week moving average and the 200-week moving average and buy signals, whether it be weekly or I even like to put on monthly buy signals, if you're getting both of those, and this is a 50-month moving average, those can be juicy times to buy if you really like a stock. So 1,000 is going to be a key psychological level. Should we get it above this 3618 and then 1114? So, I wouldn't blame you for taking profits if we get in this range here. Going over to Microsoft, man, we're looking to break above that 434 level. So it's on auto. We're getting close. I want to see us break through that 434, and then Microsoft can maybe have another leg up. But we'll see. If we go to the next extension, Microsoft, you'd have this 570 level. So just something to consider. But of course, if things all of a sudden got bearish, you can take a look at these moving averages. The 20, which is here at around 400, the 50 here at 364, and we have the 100-week moving average at the 786 fib around 320. Anytime some of the best stocks in the world get to the 100 or 200, to me, those are very juicy times to buy. And Microsoft, it is the largest market cap stock in the world at 3.18 trillion. So it's just something to keep in mind. A lot of people, a lot of YouTubers don't talk about market cap. If you put $1,000 in Microsoft right now, then not only do you want this number to double to 860 around there, but the market cap would have to double to $6.36 trillion. So just know, yes, it's slow money, but it can be grow money, and you can find good times to get in at these fibs, but especially the moving averages. 100, 200, good place to get it. Apple, you can see Apple here is at the 100. And since the year 2000, it's about once every 2 years that we get to the 100 or lower. So, and we got this this candle here, not really a big body. It's looking, it's deciding where to go, and we have the 618 fib. So if your dollar cost averaging into Apple, I wouldn't blame you. Look at this big wick on the daily. So got under that 618 and then boom. So we'll see. This right now, Apple with a pretty good bounce went up to that 50-day moving average. That's interesting. We'll see if it can break through. There's going to be some resistance here on the daily moving averages, but hey, maybe Apple's getting ready to come back up again. It went to the 50, came up, went down to the 100. Maybe it's going to come up and then go down to the 200. I don't know, but if anything like Apple, Microsoft, Google is at the 100 to 200, I'm really interested in accumulating myself. Just saying. Next, let's take a look at Amazon. So did Amazon finally make an all-time high? The gray line is an all-time high, or as close as I put it to there. And yeah, looks like we for sure did. So Amazon, all-time high. Congrats, Amazon, and all Amazon holders, especially if you got around the $80 to $90 mark. And the 1618 is at 255. Again, consider market cap. It's a $2 trillion market cap. And so, if we're talking about getting the 3 trillion or something, the next area, the 1618 is at 255, could be an area to look forward to take some profits. Google, where are we at? We are in all-time high region. Just keep going higher. And the next area, it looks like this fib is on log. So let's take it off log. Yep. And the next area we have is 193. So 193 for Google I just want to make sure Amazon was off log. Okay, it wasn't. Good. So Google, let me say that again. 190, 193, 194 could be a target to look for. Again, factor in the market cap. Right now it's at 2 trillion. So a way you could do this is what you do is you calculate, you take 193.77 at that fib and you divide it by this number right here, its current price, 159.41. I'm doing this on my phone. You'll have to trust me, bro. That's 1.2155. Okay? You take that and you multiply it times the market cap, which is 1.99 trillion. That would mean if Google got up here, that it would have a market cap of 2.42 trillion. So that's how you look for market cap. And this could be an area, I would assume there would be some profit taking. Meta, look at that. It's going up to that 1618 at 567. Do not be surprised if you see some heavy profit taking and a bounce down from 567. And it is a $1.33 trillion market cap. So, compared to some of the other Mag 7 stocks, it has room to run. If it got above the 567, 863. I'm curious about this. 863, I won't bother with decimals, divided by 523, that's 1.65. And if we take 1.65 times 1.33 trillion, okay, if it got up here, Meta would have a market cap of 2.19 trillion. Maybe it can happen, but first we have to get through the 1618. Sure, there's going to be profit taking there. Last Mag 7 stock, let's take a look at Tesla. And Tesla, we talked about these trend lines. We have these dips here, and we have the peaks here, and not looking good for Tesla right now. So broke down through those trend lines. However, okay, we are here at this fib, and we have some price structure that's at the 382 at 173.47. So we're right at that. And we have these weekly moving averages. We are underneath. If we go to the monthly, where are we at? We are between the 50. Look at the body of the candle holding on to the 50-month moving average. And if it gets close to the 100-month moving average, that might be, even for Tesla, a decent time to take some profit. So 200 doesn't look to be showing up yet on this chart. So yeah, that's where we are at for Tesla on the daily. Some decent accumulation here, but gosh, it's holding on to this fib by a thread. You want to see it move higher for sure. Let's take a look at some of those stocks we talked about in the earnings reports. We talked about WD-40, interested in that one, WDFC, and adding in an E in there. Okay, WD-40. What do we got here? Oh boy. So on the daily, look at that. Earnings this week, what happened? Big sell signal. Look at this. They pump. I see this so many times, guys, where if a stock is pumping up going into earnings, I swear most of the time I see a sell-off, and vice versa. If it's selling off in the earnings, a lot of times I see a pump. Just what I noticed. Not sure what the overall data on that is, if it really is true that, most of the time that when stocks pump into earnings that they sell off. I'd be interested about that. But you can see earnings recently, and then boom, we sold off. We went from 258 down to 234. So that's a pretty decent move. How much was that? Curious. 11%. That's a pretty big deal within a week for a stock. So this is on the daily. On the weekly, yeah, look at that long-legged doji candle. So there might be still some further down to go. It's at the 200-day. Look at that 200-day. It's held it a lot of times, on the way up. And if it's to continue being bullish, you want that 200-day to hold. But if it breaks the 200-day, look at what happened the last time it broke. That's when we got into a bearish downtrend, and WD-40, it went from 332 to 145 at a 56% sell-off. Okay. On the weekly, Yeah, you got the 50 here. Look at this. As it was going up, it's stayed bouncing off the 50. So if it keeps staying bouncing off the 50 week, that'd be a good sign. Monthly, if you're looking to be super macro, the monthly, you have the 100-month moving average. And that was a good time to buy last time we had that monthly signal. So we did just get a monthly sell signal. Yeah, it's interesting. So WD-40 stock, it looks like one that might have some further downside coming up. And it has a market cap of 3.27 billion. So that it would make it a top 50 crypto altcoin if you think of it that way. What else did we have here? Delta. I wanted to look at Delta. Delta sucks, but let's take a look at it anyways. It's better than Spirit Airline. Well, that's cool. Look at this. The 200-month, literally just showed up. If we go to the weekly, okay, we're above our moving averages there. Look at this stock, man. Here in March of 2020, look at how much this stock tanked. Just brutal. 70% roughly. And it's just been chopping up and down. Just totally took back or went up and took back all this action that we lost down here. Man, what percentage is that? That's crazy to go down 38% and then back up again. And that's just been since July of last year. So Delta looks kind of crazy. Would I buy it now? No. If there was a big sell-off event, sure, maybe you can see here, you can probably draw a couple trend lines too. We have a giant flag pattern showing. But yeah, it's just interesting. Delta. I don't love their products, so I typically stay away from airline stocks. What was the one that? Oh yeah, Lovesac. I like their couches. They're easy to move rather than a typical couch, so I was interested in them. LOVE, and then we'll take a look at the bank stocks and wrap it up. If there's any stocks you want me to take a look at, comment below. Be happy to. And as well, I'm just trying to, show how I look at stocks, with different moving averages, with fibs, with the buy-sell signals. I want this to be an educational channel for all of us, myself included. So, we can grow a community, just helping each other out, finding ways to make investing less scary for people. If you've maxed out your input for what you put into your Roth IRA and you're just looking for, ways to cautiously, safely invest in the long term, that's the goal of my channel, to make investing in stocks and crypto less scary, but to also try to find smart, deep value times to dollar cost average in and get bang for our buck. So here at the weekly, Lovesac, man, we have a weekly sell signal at the 50. And if we go to the monthly, yeah, we have the 10 and the 20. It's staying underneath as well. And we have a monthly sell signal. So it almost looks like maybe this one's looking to go back down again. We have some structure here that's really trying to hold around the 20 level. But if it got under this 14 level, look up below. Lovesac, if it ever got down to this $5 level, heck, I might be tempted to throw some money at it. So that's what's going on for Lovesac. Does it show its market cap? $300 million. So smaller company. Do your research, of course. Don't only go based off the charts. Lastly, let's take a look at some of these. JP Morgan. It's interesting, how the bank stocks do, especially, in times when there's recessions, financial troubles, all that stuff. So you can see here when JP Morgan went down 77%. I mean, so did the whole stock market. So bank stocks, they can be an indication. 72%, great financial crisis. Here, March 2020, of course. Here, late 22. We've been running up a bit. So right now there's no sign of a bearish turnaround. Sure, maybe on the daily there might be something. I wouldn't read too much into it yet, unless it starts getting under the 50-day moving average. Then, maybe you can start looking out for stuff. Right now, macro-wise, still looking pretty strong, still looking pretty bullish. So if you start to see JP Morgan show some weakness, as we showed before, that might be a sign of things to come. We have Wells Fargo, WFC. Okay, similar to JP Morgan. We do have this red candle though on the weekly. No sell signal yet. But yeah, should we get a big sell-off? Look at this. Again, late 22, early 23. That was a downtime. Man, COVID just flipping crushed this guy. Any of you guys get some Wells Fargo when it's down here or buy the dip during COVID? I mean, that was a scary time to buy. People were thinking it was going to go a lot lower, but, then it just shot back up so fast. So, yeah, that's what we got for Wells Fargo. BlackRock, interested in that. BLK. Then we'll end there. BLK. BlackRock. So, man, this looks a lot like the S&P 500 in a way, doesn't it? Just with, it looks more similar to the structure of it, even though it hasn't ran up to new all-time highs. So BlackRock, this is interesting. It's at the 20-week moving average. If we go to daily, zoom in a little bit, it's at the 100-day moving average. So interesting things for BlackRock. Just because it's in between that level, I want to draw a fib on it. Let's put a fib on this bad boy. And let's also, anytime we're looking between the prior highs and recent lows, we put on a log that can help us, have a better idea. Look at that, went up to the 786. Yeah, it's 0.5, 618, 786. Went up there. I probably didn't draw my fib perfectly, or maybe it got close, and then started selling off. So, yeah, now it goes down to the 20. And if it keeps going down, you got to look at the 618 at 757. And the 50 moving average there too. Underneath that, we have the 100, the 200, and the 0.5. Underneath that, then you have these other fibs. It's just interesting. It's a couple different ways of looking at it. I can also throw on the RSIs as well, or the MACD, and that tends to show a lot too. So if we take off our buy and sell signal and throw on the MACD, it's moving average, convergence, divergence, just so you know. And you can see, look at this, on the weekly, it just flipped red. So I would not be surprised to see it go a lot lower because of that. Sometimes, guys, when you do this long enough, you just take a look at a chart and you already know without pulling up the indicator, like, I'm pretty sure it has a sell signal or the MACD is flipping red. And sure enough, my hunch was correct. So anyways, hope you guys are doing well. Hope you're enjoying these videos. If there's anything to do with stocks that you would like for me to also look at or consider in these videos, please comment below. I'm open to any and all feedback. Again, I'm looking to grow a community of long-term investors in a way that we can help each other look at ways to enjoy investing and, spend time in the market just looking for good deals, looking for ways to make our hard-earned money work for us and to help each other out, to find deep value areas to buy. Again, not chasing the hype, not chasing the pumps, the greed, all that, trying to be smart investors and remove our bias where we can. So hope you guys have a wonderful weekend. I only had a 4-day week, so I'm going to go on some hikes and stuff. And yeah, might not put out any more videos for the weekend. But, if you're new to investing, whether stocks or crypto, maybe write down a list of 4 or 5 stocks. I think of products I really love, products I use, and from there, do your research on them, look for the goods and the bads, pull up the charts and see, hey, where's it at? Let me do one more. I have a neighbor who works for Pepsi, and he really loves Pepsi. And you know what? I'm more of a Coke guy myself, not cocaine, chill out. But I know it's a very strong stock long term, and look at that. It's between the 100 and the 200 as a sell signal. So maybe we can get some Pepsi on the dip here. Sometimes this is all I do when I'm looking for good value plays on some stocks I really love. So anyways, hope you guys are doing well. Take care.